Hello and welcome to the Tie's Fundamental Value Podcast. I'm your host, Joshua Frank, co-founder and CEO of the Tie. I'm super lucky today to be joined by not only the king of crypto mining in North America, but a good friend of mine, Mike Colyer, CEO at DCG Foundry. Mike, it's so great to have you on.
Joshua, thank you very much. Excited to be here. I'm not sure king of crypto mining is the right description, but
I added in North America at the end. Well, Jihan, we're coming for you. Don't worry. I see you, Mike. Don't worry. So let's roll right into it. So can you give us a little background on yourself? And you weren't always mining crypto. So what were you doing before you stumbled upon Bitcoin in this industry?
yeah, so I'm older than most in the crypto space. So I've had 20 plus years of working in what I call the traditional world now. So manufacturing, distribution. Started my career with GE back in the 90s when GE was, like one of the main companies in the world. And the last 10 years, I was a hired gun for private equity firms. So I'd come into a company and be the president or CEO and try to fix it. So I spent, early part of my career, I was a Six Sigma black belt, lean manufacturing, kind of process improvement, and just kind of have that mindset in terms of approaching different problems. And that's one of the reasons I jumped into the crypto world.
Yeah. And so how did you first stumble upon digital assets, and when did you kind of decide that, hey, this is something I want to, dive full time into?
I think everybody's got their, first discovered Bitcoin story, right? Like mine was actually way back in, like 2012. I had a kid at the time working for me. He was a physics major, and he came into my office and said, "Hey, I can mine Bitcoin." And we spent like 3 hours talking about Bitcoin and what it is. And at the end of it, we concluded, yeah, it's mostly just for drug dealers and bad people, and we probably should avoid it, right? And I didn't pay much attention to it until 2017. And I had a chance to take some time off in between gigs. And my wife asked me she said, take the whole summer off and just enjoy the summer. And I stumbled upon blockchain technology. And as I read about it, I realized it reminded me of the start of the internet. So I was in college when like Netscape came out way back, like way back. And it just, with blockchain technology, I realized it fixes a lot of things that can't be fixed with just the internet. And I thought, wow, this is going to drive a lot of productivity and efficiency for businesses in the future. And I just became fascinated with it.
And so why mining? Why was mining the first foray into crypto for yourself? I mean, I know you had that experience back in 2012, but.
So yeah, I didn't do anything with it in 2012, like not like zero, right? Just we talked about
a conversation.
it.
Yeah,
it was a conversation, and that was it.
That's more than a lot of people had in 2012. So
yeah, very true. So it wasn't, mining wasn't my first foray. I spent the month of August of 2000 or July, most of July and August in 2017. I would say like day trading crypto.
Everybody's first experience in crypto is day trading.
So it's day trading, right? And
it doesn't matter if you know how to day trade or not. Everybody's first experience is day trading.
By the way, I had no clue. Like I had no idea what I was doing. I was spending like 15, 20 hours a day researching crypto, learning about it. Met some guys, and I live in Rochester, New York, and I met some guys in Buffalo that had this Buffalo blockchain startup or meetup every Tuesday. I'd drive to Buffalo and I'd listen to them talk about, all these altcoins and everything that was going to happen in crypto. And I learned a tremendous amount about myself. It was probably some of the most, I'm glad I did it. Those 6 weeks of day trading taught me a lot about the market and about myself. And I realized man, I'm not good at this and I'm way too emotional and I can't survive day trading. Right. And just sitting behind the computer, and it just wasn't that engaging for me or exciting. I thought, man, I want to build something. And I really felt like this is the way of the future. We're still very early, and I was an engineer by background. And I was like, you know what? We have to build out the infrastructure first before this thing can really grow. So I started exploring mining, and I got deeper and deeper into the mining world. It made sense to me. Like, I connected the dots, and I thought, well, mining's always going to be here. It's always critical to the overall network, providing the security. And I lived in Western New York where it was cold and we had cheap hydropower. So I was like, when was the last time we had a competitive advantage in Western New York? And I thought I would jump into mining, and I decided,
well, as a
to
Jets
go head
fan, at
first.
least you got an advantage over us with the Bills. So you got one thing going.
Do they still have a football team down there in New York?
Yeah, we got two of them. I think they have 2 wins between both of them. So
the Bills, finally, we got a winning season. It's been exciting.
I just can't wait for the Jets to win a game and end up with the second draft pick, because it's the most Jets thing to do as a Jets fan. So
Yeah, exactly.
So what was the mining space like when you initially started? And how have you seen it evolved over the years? And I kind of mean that, across a few different spectrums, but I assume it was a lot more fractured of a space back then, and less sophisticated, but I would love to get your full take on that.
Yeah. So, China got out to a really fast start on, I shouldn't say that. When I read about mining, the history of mining, it was really big in North America early on and in Europe, and it was really decentralized. And it wasn't really until Bitmain was able to mass produce the ASIC machines that China became a dominant force in it, right? So they figured out how to build the ASICs at scale, and then some entrepreneurs in China decided, hey, let's go mine at scale, and they started building out big mining farms, in kind of late the year 2016, and most of the machines went that direction, right? And in the U.S., we really hadn't moved to any kind of scale. So when I got involved, people were talking about doing large scale mining, but nobody was actually doing it. And I got connected with a great company here in Western New York called Savage. They wanted me to come in and help grow their business. And we grew it from like 1 megawatt to 3 megawatts, which at the time seemed like this enormous scale. And then I knew the guys that started Core Scientific, and I went down to visit them, and they'd built out like 6 megawatts in 6 weeks in early 2018. And it was just one of those.
They came out with a blast.
Yeah, it was like, wow, that's a lot of machines and a lot of megawatts really fast. And then they talked me into joining with them. And while I was there, we kind of grew it from like 25 megawatts to 100 megawatts. And I think today they're up over 150 and growing, with plans, to go to like 250 megawatts. So they're one of the largest in North America. So what I would say what happened, I think in 2017, a lot of entrepreneurs in North America realized that mining at scale was a real thing. It was a real industry. And we had some competitive advantages in North America, and people started investing and started scaling. And today, it's continued to scale at an even greater rate. It's amazing.
And so, like, how many major players would you guess there are in North America at this point? I mean, I'm sure there's a lot of smaller operations, but is it a handful of big players that are kind of the size of Core Scientific, or still a little bit fractured?
I think I'd say there's 10 to 15 large scale miners in North America between the US and Canada.
And so, yeah, can you kind of describe your experience? I know you mentioned Savage, and I know you started something on your own before that, and you went to Core Scientific. What were the different roles that you played at these organizations?
Yeah, so early on, I'm not a computer scientist, right? So that's not my background. But I had a chance, I thought I was going to go build my own mining farm. So I found some property, I found some cheap electricity. And then, when I got connected with the Savage guys, and, I did everything, put machines on the shelf, plugged them in. I can remember, the first week of July of 2018 was one of the hottest weeks ever in Western New York. Cause I know at like 11:30 at night, I was still, working with my good buddy Neil, cutting a hole in the wall, putting more fans in so that the machines wouldn't burn up, so kind of it got my hands dirty, doing some of that work. And then, I spent a lot of time at Core on the business development side, really understanding the landscape of mining in the world, built strong relationships with the manufacturers over in China. Mining is really the wild, wild west. It's getting better, but it was really hard to figure out who was real and who was not real in the mining space.
I feel like that's still a little bit the case, no? Or is it becoming more clear?
So it is still the case, but a lot of people got washed out. So I think, in this next bull run, in 2021, we're going to see a lot of scams. We're going to see a lot of people reappearing or jumping into mining. Everyone's going to be touting their, 1 gigawatt facilities with, 1 cent power. We're going to see lots of that stuff come back. So you have to be very, very careful as you tread through.
Yeah. What are the telltale signs of, I guess you kind of brought a couple of them up, like having a gigawatt of power, but
yeah. So I think it's, if it's too good to be true, if it sounds too good, so you just have to be really careful. To be successful in mining is a great business. It's a great industry. People ask me, like, is it profitable to mine? Well, if it wasn't profitable, then the network would collapse and Bitcoin would go away, right? So it's profitable for somebody somewhere to keep the machines running, or the whole system doesn't work. And in order to do that, you really do have to understand the cycles of mining. So like Leo Zhang has put out some really great research around kind of characterizing the cycles of mining. And you have to buy machines at the right time. You have to buy them for the right price. You have to have low cost power. And then you have to be able to manage them, find a good hosting partner that can keep them running. So if you do all those things right, it's a great business. I think people tend to get too emotional when it comes to mining. And it becomes more like just an investing, and they can make bad decisions, or they can be talked into making bad investments. So you gotta have a long-term plan, and you have to understand how to play the cycles of the mining industry. No different than, like drilling for oil or, mining gold. And there's times to be investing and there's times not to be investing. So I've, the last 12 months, it's been a lot of interesting conversations where, it's been, basically like, look, if you don't think it's good to invest right now, you probably shouldn't be in the mining business,
Right. If you're not investing at Bitcoin 19K, you probably shouldn't be here.
Yeah. Right. Like if you think it's overheated, then yeah, this isn't the right space for you.
And so most recently, and obviously most exciting, this has actually been going on for a while, but very quietly, you joined DCG and spun off a new subsidiary with $100 million in fundraising called Foundry Digital. So can you describe how Foundry got started in the original vision for the firm?
Yeah, so Barry Silbert, the founder and CEO of the Digital Currency Group, he, he's been in the space for a long, long time. He has avoided mining, right? So he always avoided the mining space. He just felt like it was difficult to navigate. it was hard to tell what was real and not real, and just he found other ways to make money in crypto. And in the middle of last year, he tried to buy some equipment to mine a couple coins he was interested in, and realized that not much had changed in the mining space, and he just thought it was a really good opportunity, and the time was right to start making some big investments in North American mining, and really, increase the professionalism of the industry. And he felt like institutional money was going to start pouring into the space in a way that we'd never seen before, and we needed to provide the tools necessary to make that happen. So he founded Foundry. So we are focused on decentralized infrastructure, whether it's proof of work or proof of stake. We spend a lot of time in both worlds. We're essentially the infrastructure team for DCG. So anything that's related to infrastructure kind of comes our way. And Barry, basically, I joined in October last year. We spent most of the last 12 months in stealth mode, just kind of building. We announced to the world, and I think it was late August, what we were doing. And he basically gave me a white sheet of paper and said, go figure out how to leverage the DCG brand, its the trust that it's built, its balance sheet, its portfolio companies, and see where we can add the most value to North American mining. And so we spent a month or two kind of going through a lot of different thoughts and ideas, and we settled in on, we want to bring more hash rate to North America. And there's been a lot of infrastructure built out, but most of the miners needed to upgrade their equipment. And so we decided to launch our equipment financing business. So using the equipment as collateral, we allowed miners to scale. And really what it allowed us to do is get to the front of the line to get equipment from MicroBT and from Bitmain. And those were the two guys that were producing the best machines. And we were able to bring a lot of equipment into a lot of hash rate in North America. So we've deployed now well over $100 million into North American mining. We mine ourselves, so we have our own equipment. We don't have any of our own facilities. We host with kind of the top providers in North America. So we've got equipment, spread out throughout North America.
And how many assets are you guys mining?
A lot.
Is it predominantly Bitcoin, or is it really mixed?
Yeah, I mean, it's predominantly Bitcoin, right? So we do mine some other coins. Equihash mining's been great. We mine a little bit with Ethereum, but it's mostly Bitcoin. So we're one of the largest Bitcoin miners, I think, in North America now, as well as providing, financing for other miners. Our goal is to grow the industry and to support the entire ecosystem.
So one thing you mentioned to me a few years ago already, and that stuck with me, is the fact that at the end of the day, miners have an electricity bill each month, and have, at the end of the month, you got to pay to keep the lights on, right?
Yeah.
And so there's kind of this need to, sell out of your coin. So I mean, I assume that the demand for borrowing is incredibly high, or has that kind of changed since Bitcoin's price has run up more, or is it remain constant in terms of the need to borrow, and does it kind of increase as newer equipment comes into the market?
So I think in terms of upgrading your equipment, most miners need financing to upgrade to the next gen equipment, right? So they use financing for that, or some of them will raise capital through equity. In terms of paying your electricity bill, I think that gets pretty risky if you start leveraging up in a great deal to borrow more money to pay the electricity bill. But the new equipment, the new machines, they make plenty of money to pay your electricity bill, as well as provide to be able to pay off the units in less than 18 months. So So miners liquidate on a monthly basis to pay their hosting bills and electricity bills.
And so, we're obviously seeing this giant institutional run into the space. And so, how do institutions interact with mining, right? Because we hear all of these, large financial institutions are deciding to, or just, large hedge fund guys that are now taking a position in Bitcoin or in GBTC or buying CME Bitcoin futures. But you don't really hear that much conversation and that much talk about these institutions interacting with mining. So, I'm sure there are tremendous opportunities for them to get involved with the space and to get involved with Foundry. Can you kind of walk us through what some of those are?
Yeah. So our view is mining. I think of mining more like a utility. So a lot of people get into mining and they think that they're going to get rich mining and say, look at if you want to swing for the fences, just buy Bitcoin and hold, right? Mining is a way to protect the downside risk of the fluctuations in the market. And I think over time, it kind of produces a good steady, I think of it like a good steady dividend, right? For your investment. And if you manage your cash right, you continually upgrade your equipment over time, this can be a good long-term business. And I think it's a critical infrastructure for the future world. And our view is through this cycle and into the next cycle, we think more power producers are going to get involved in the space. More utilities are going to get involved in the space. And even nation states are going to have a strategy around Bitcoin mining. Like, how do we utilize our natural resources to support this network? So we're at the very beginning of this kind of next cycle. In the United States, are a big portion of our electrical infrastructure is decentralized and hedge funds own power plants, and these guys are starting to look at this and go, wow, this is actually a great business for us to get into. And we're starting to see examples pop up around the country. And I think we're going to see more and more of that over the next couple of years.
And so I guess on a similar note, and you kind of alluded to it, mining is the infrastructure for crypto, right? And so why does that make Foundry strategically important to the rest of DCG and the efforts that DCG is undertaking?
Yeah, great. It's a great question. I think Barry is a big believer in the future of this decentralized finance world, and a huge believer in Bitcoin, has been since the early days. I think if you believe if Bitcoin's going to be here long term, then you're always going to have the infrastructure to support it, right? So it's a long-term play. And I think that was one of the key things for me, and what made me the most excited about coming to DCG was, Barry made it very clear early on. He's like, look at Mike, you're building a business for the next 10 to 20 years. Like, don't worry about the next 6 months. Don't even worry about this cycle. We're going to make long-term bets on this space. And I don't need you to hit a home run. Just get on base. And so it's exciting. It gives me a lot of freedom to think longer term, to make investments longer term. And mining's always going to be here. I spend a lot of time working with the Genesis team. I know the guys over at Genesis fairly well. They've got a great insight into the market. And they're big believers in the mining space. And we've been doing a lot of work actually with Genesis around how to help miners be more successful, right? So, most people that get into mining because they like the idea of, how do I make something more efficient? How do I get these machines plugged in? How do I keep them running? How do I make Bitcoin, right? They're all about like, how do I make Bitcoin? They make all this Bitcoin, but they don't necessarily know what to do with the Bitcoin, right? So they've made it, and now they think that, and I've done it myself. Like, I've lived through this personally of trying to time the market, of okay, I'm getting paid in
Logging onto
Bitcoin.
Coinbase and dumping all your Bitcoin on one day.
Yeah. Or it's like, oh, I think Tuesdays are good days to sell, or I'm just gonna hold a little bit longer. And so I'd say treasury management is kind of like the next frontier for Bitcoin miners, is really learning how to manage their what they make, right? And they have to produce cash flow because they got to pay their bills. So we've been spending a lot of time with the Genesis folks and experimenting with different things with our own mining operation. So we've been working with like the derivatives team, and they're like, oh, you should be,
Is this Josh Lim who's
yeah, Josh he's an amazing guy. Um, and he's been so patient with me because I really don't know much about that part of the world. And and he's been learning the mining space, right? So it's kind of a two-way street. Um,
And interestingly, the same thing goes with token foundations, right? There's a similar thing going on, and I think a lot of the foundations have started to actually open up trading desks and work with other different types of market participants on that front, because they have the same challenge, right? If you're a token issuer, you have to pay 150 staff members each month, right? And you don't know how to manage a treasury, right? Just like a miner is more technical in nature, right? A token issuer tends to be more focused on development. I think there's a lot of parallels there.
Absolutely. And even in the discussions I've had with Joshua, he's like, well, you could sell a forward call on all your mining for the next 12 months, or 12, next month. And so I'm walking through, and he's teaching me how how I could sell this call.
Options,
and I'm like,
yeah.
but this call option, right? And he's like, well, if the price falls though on the last day and I have to sell, I could get really hurt. He's like, well, yeah, that's part of the risk you're taking. I'm like, yeah, but I can't afford to take that much risk because I got to pay my electric bill. So we've been looking at like, what's the right percent, what's the right timing, and we've been doing it for the last three months or so, and we're making extra money at it, and it's really fascinating. And our goal is to bring more of those tools to other miners in the space and help them really de-risk their operations as well as profitize their operations. And I think you have to have different strategies for different parts of the cycle, right? So now, you want to try to hang on to as many Bitcoin as you can right now in this cycle because the price is moving up, right? So if you can lend those coins to Genesis and earn interest on it, or lend the coins and take fiat out to pay your electricity bill, but hold more coins for the next 6 months. There's a lot of different strategies.
Yeah,
there.
there's two interesting things or quick things come to my mind, right? When you say that, the first is, there's this inevitable kind of conflict that most miners have, because I think most miners are incredibly long Bitcoin, right? And so on one hand, you have the day-to-day profitability of this organization and maximizing shareholder interest, but you also have this love and interest in Bitcoin and trying to maximize your Bitcoin holdings. And do those two things come into conflict of one another, where you're just like, I really don't want to sell my Bitcoin like right now, right? And do you think that emotion kind of gets involved and hurts some people in this industry?
Oh, absolutely. Absolutely. What you have to plan for is you have to think long-term if you're going to be in mining, right? And that's where I go back to, it's more like a utility where you're going to expect some sort of constant return over time. And if you think you're going to get rich mining, you're better off just buying Bitcoin and holding for a long term, right? So this is so there's been lots of analysis around, you're probably one of the best strategies is just mine and sell every day, right? During certain cycles, that's the best strategy, is literally sell every single day. If you try to time the market, you're going to be upside down. Selling some forward call options actually gives you a little extra juice, but you're not going to, you might make a couple extra percent on your assets, as opposed to making huge amounts of money, right? So I think for us, we're here to to provide a service to the industry and to defend the network. Like, we provide the security for the Bitcoin network, and that's our job.
Yeah, and can you go into that really quick? Why that's so important, and also kind of what role you think DCG and Foundry plays, in securing the Bitcoin network, and where China fits into that picture. We hear a lot of stories about people being worried about the size of mining pools in China, and I'm sure you remember maybe a year ago or so, CZ suggested that they reverse, transactions on the Bitcoin network when there was a large hack. And so, kind of where, the strategic importance of North America and kind of removing some of that hash rate out of China and Asia, or if you think that's actually important.
Yeah, so a lot of people love to make this like a US versus China story. And I don't really buy into that. I think what's important is continuing to keep the hash rate decentralized throughout the world.
Right.
And it's going to fluctuate over time, right? So it would not be good for the US to dominate the hash rate either. And I don't think the US will ever dominate the hash rate, but I do think we can make it a little more level throughout the world. We've got incredible support from Bitmain and MicroBT to grow hash rate in North America. They see it as a huge opportunity for their businesses, and they're very excited to support us on this. I think the United States has some great advantages for mining. Everybody loves to talk about the regulatory environment. I think we have a lot of low-cost energy. We have a lot of stranded energy. We have a lot of infrastructure already built, and entrepreneurs in the United States are seeing that and seeing the opportunity to go create more hash rate in North America. So what, from a security perspective, for Bitcoin to continue to grow, the price of Bitcoin to grow, for it to become used by more and more people, I think you have to continue to provide more and more security to the network, and you provide that security to the network through more investment in hash power. So they kind of go one and the same, right? Like, I don't think Bitcoin can, everyone, the Winklevoss twins love to say Bitcoin is going to be $500,000 per coin, right? We're not going to get there until the hash rate is, I don't know, pick a number, 500 exahash or 1,000 exahash. So it's going to continue to grow.
And so, kind of just quickly back to your own mining operations. So one of the questions that I always have is how do you determine which assets to mine, and how just much of an equation is that? Is it just, plug and play, this is currently the cost of mining, let's, and I know that certain mining equipment is only capable of mining certain networks, right? So I guess you're inevitably limited a little bit by at least the type of equipment that you have. But how do you determine, which assets to mine at any given point in time? Are you changing that? Like, are you mining one asset one day and then halfway through the day flipping and mining something else because it becomes more profitable? Like, what does that process actually look like?
Yeah, so there's a couple different things in that question. One, it definitely depends on the equipment that you have, right? So certain equipment only mines certain algorithms. And then within that algorithm, there could be multiple coins that could be mined in that algorithm, right? So SHA-256, you can mine Bitcoin, you can mine Bitcoin Cash, you can mine Bitcoin SV. So you can switch between those. For us, I think our approach is there are certain algorithms we believe in, certain protocols we believe in, and we want to support those protocols. So we pretty much mine those particular coins. You can go use the online calculators. Some of them are really good, but you also have to understand the cycle, right? So, for instance, back in January, February of this year, you went to the online calculators, it would tell you that probably, the return on investment, most people, when they get into mining, they want a return on investment in less than 12 months, right? And for me, coming from the traditional world, when you're making capital investments and you can get a 12-month return, that is like off the charts incredible, right? But back in January, February, all the online calculators would say, investing in mining was a 2-year payback, and nobody wanted to invest. And we looked at it and said, well, those online calculators are like a point in time, and if the market performs the way we think it's going to perform, you want to get your hands on machines when you can. So we started buying lots and lots of equipment in the first half of last year. And even when we started plugging the stuff in, the online calculator still said it was going to be a 2-year return, right? Well, we've been mining with this equipment for 6 months. The equipment is worth more today than what it was when we purchased it. And now the online calculators are saying, I don't know, it's like a 12-month return, So, but the problem is you can't get equipment now.
Yeah, that was going to be my question is so how did you, when you first went out to get equipment, how did you source that? Are you buying only new equipment? How are you dealing with, manufacturers and what does the supply chain look like and why are there issues today?
Yeah, so for us, we only focused on the latest generation equipment. We only worked right now we work with Bitmain and MicroBT because they had the best equipment out on the market. And it's tough. We had to place bets knowing that new equipment wasn't going to arrive for, and back then it was like 4 to 5 months. And you have to put all the cash up front. So you're wiring millions and millions of dollars to China. And, you have to understand who you're working with. And there's a little bit of a bet that they're going to come through with the machines, right? And that's still the case today. If you want to get into the mining, you have to place your bet now, and they're taking orders for July now. So we're almost 7 months out.
It's like almost worse than the vaccine. It's like it's coming after the COVID vaccine.
Exactly. So, you have to, so I tell people, like, if you want to get into mining and you're serious about it, you have to make your bets today. Like, you have to place your bets today. You can't wait until March of next year to place your bet because you're not going to get your equipment.
Why is the supply chain such an issue, though? Why is there such a backlog?
Great question. So it's really a wafer constraint at TSMC and Samsung. So those are the two big wafer production for chips.
Can you explain? Yeah, what a wafer is? Sorry.
Yeah, so don't make me get too technical because I can't go that far.
Whatever. It's some piece of equipment that's incredibly important to like
for your phones. Those micro are made from a silicone wafer. Those wafers are produced really in the latest generation wafers are produced in 2 places, Taiwan at TSMC and in South Korea with Samsung. And most of the wafer production obviously goes for computers and phones. So Apple gets the best chips. What MicroBT and Bitmain have done is they've taken those chips, they've designed ASICs using that wafer technology to mine Bitcoin, right? In this particular case. So the problem is that they're kind of at the back of the line, right? Are you gonna give wafers to Apple, or are you gonna give wafers to Bitmain, right? Like that's the decision that has to be made. So Bitmain gets some. They get a very, very small. I think the industry in total gets like 3 to 5% of all wafer production goes to Bitcoin mining. So there right now, there's just a huge demand for the latest generation phones. So
So
the
basically,
manufacturer,
if you're in crypto, stop buying the new iPhone is what we're hearing here from
you
Mike.
know, yeah. Um, so TSMC and Samsung only give so much production capacity to MicroBT and Bitmain. So they're constrained there. So there's not that many machines available. I think that'll probably change towards the end of next year and into 2022. So this cycle, I think, is going to be a little bit longer than people anticipate.
Yeah, I wonder if we'll eventually be flooded with equipment. I'm sure the answer is yes, right? You know,
Absolutely.
at the beginning of COVID, right? Nobody could get a mask, nobody could get hand sanitizer, and now every single piece of hand sanitizer is on sale. So, yeah, it's to your point, it's cycles, right? And I think
It's
having that
cycles.
long-term approach and investing in, you know, knowing that you're going to have a cycle where there's a tremendous amount of equipment, you're eventually going to have a cycle where there's a tremendous amount of new capital flowing into the space. I think being prepared for that is super interesting. And so, do you think that miners' power over the Bitcoin or crypto industry more broadly is over or underrepresented? And how can miners directly impact markets?
So miners are important, obviously, to the security of the network and to process the transactions. Um, in terms of their influence on the price, I don't know. I'm becoming less and less convinced that miners really have a huge impact on the overall price of Bitcoin.
And I think that's changed. I think that you had a belief that they had more of an impact a few years ago.
I did. I did. And maybe in different cycles, so they definitely when mining margins are tight, they're liquidating everything they're mining. And when mining margins are robust, they're able to hold more coin.
I mean, but we're talking less money being liquidated than is rolling into grayscale on a daily basis. So
Exactly. So yeah, I think this market has changed dramatically, and I'm not sure people really appreciate how much it's changed. A lot of people talk about it, I guess, today of like we're sitting close to 20,000, and this feels very different than 2017.
yeah, and I mean, I think it also has to do with, you know, when there was a block reward of 50, and obviously there was not really a mining industry back then, but, you know, people were mining on their computers, you know, those individuals had much more significant of an impact than would be today, just because now the supply of Bitcoin is up to, what, 19 million or 18 plus million in active supply. You know, the block reward is 6.25 BTC. So it's significantly less of an impact than I think could have been the case. Even 2 years ago, you may have been more right, just because the block reward size was double what it is today.
Yeah, yeah, and maybe it changes a year from now um, when the prices of Bitcoin is much higher and there's less that's moving, and the only real flow is from the miners, maybe, and all of a sudden miners decide not to sell, and maybe you get some wild spikes, but at some point the miners have to sell to pay their electric bill. There's no way around that. We haven't got utilities yet to accept Bitcoin. uh, like another great I think myth is around this like this virgin coin idea. Like
I remember people saying, like, people would pay 20% more for a virgin coin. I'm like, what are you talking about?
yeah, so I like look at it. If you want to pay me 20% more for the Bitcoin I'm mining, give me a call. I will sell it to you for sure.
Right.
But it was the first question I asked when I got the DCG. I asked the Grayscale guys, I asked the Genesis guys. I'm like, hey, will you pay extra for Virgin Coin? And they're like, what are you talking about? No.
Anybody listening who doesn't know, virgin coin just means newly mined coin. And there have been, you know, just a coin that was mined. Basically, the idea that people were floating around at least a couple of years ago was the idea that people didn't want to touch risky Bitcoins, right? And if it was newly mined, it was less risky. But we've obviously seen, you know, solutions enter this market around, you know, market monitoring and surveillance, from Elliptic to Chainalysis to others in the space. It's very easy to track Bitcoin and ownership history and whether or not it's participated in black markets. So, to your point, I mean, that makes sense, you know.
Yeah.
And,
So I would the one other thing is people are thinking about getting into the space. Before you make an investment in a mining facility or mining equipment, give us a call and we can help you think through that investment and help you avoid a lot of the pitfalls that people fall into. Reach out.
well, I was about to, my next question that flows in perfectly is, what are the biggest challenges and risks, and what are the things that people need to be aware of, which, obviously they should reach out to get a lot more detail, but give us the 30-second pitch.
Yeah. So if it sounds too good to be true, it is. It's false. It's not. It's not gonna work out the way you think it's gonna work out. I'd say the biggest pitfalls is project delays, is buying the equipment at the wrong time, and not having a low enough cost. And Bitcoin is ruthless. The Bitcoin algorithm is ruthless in its quest for low cost, and the guys that are focused on low cost are the ones that win long term. So if you miss the cycle by 6 months, you can get burned really fast. They call us. We can help talk you through it.
And we'll put all of the links to Foundry in the description on the video. And then if you're listening to the audio on the podcast, it will also be in the description as well.
Yeah, great.
And so you brought up Bitmain earlier, and they are the largest, or were the largest chip manufacturer, but they've had very public and notable internal conflicts and shipment delays. So, how reliant are companies on receiving new equipment in a timely manner? And I guess to your point earlier, it's you need to make the investment knowing it's coming later, and it's not just on Bitmain. But how impactful do you think this feud is on the industry more broadly? The internal feud at Bitmain, because it's impact. One of my closest friends is one of the largest shareholders and is fuming. It seems like it's having some levels of ripple effects throughout the rest of the market.
Yeah, so I think it's unfortunate. It just creates more. It just speaks to kind of the wild west mentality of mining. When the biggest company in the space has these very public disagreements, internal disagreements. So it was pretty ugly, through the summer and early fall. I would say it was pretty ugly at Bitmain, and it was challenging, and they made a lot of miners upset. And I think they set back their business a little bit. From what we can tell over the last kind of 8 weeks, things have improved significantly. So they're starting to ship product on time now, and really ramping up their efforts for next year. So, I think Jihan and McCree kind of figured out a way that they can work together going forward, and I think overall that'll be good for the industry.
And so, on a related note, Canaan yesterday came out with their earnings, and their stock fell by about 13%. They noted a decrease in demand for equipment. Equipment sales were down, and different things like that. Do you think that's a manufacturer problem, or do you think that the industry just saw less demand over the past few months, which is kind of returning with price going back up?
So for Canaan and InnoSilicon and some of the other guys, it's been harder for them to get wafers and to really build a competitive machine compared to what the S19 or the M30S. So they just haven't been able to get a machine out to the market that is a good investment for miners. Hopefully that changes next year. Both of them, everybody's announced kind of new machines coming out at some point next year. I don't know when that's actually going to happen, just based on wafer availability, getting chips. So I don't know. They're in a tough spot right now.
And so, this is the Fundamental Value Podcast. So one question that we ask all of our guests, and I'm interested in your perspective, obviously as a miner, is how do you define fundamentals for crypto, and does it depend on the token?
I'm trying to.
There's a lot to unpack. It's a giant
Yeah,
question,
like
which is why we have a
yeah,
whole podcast around it, right? When you're looking at Bitcoin and Bitcoin's value, what are the drivers of that, and what makes it valuable? I guess is my question.
yeah. So I'll answer that from I guess a miner's perspective, right? So people say, well, there's nothing that backs Bitcoin, and I'd say, well, there's 4 to 5 million machines spread out throughout the world mining Bitcoin, which is providing the security, processing the transactions, and it's done in a decentralized way in which it can never be shut down. Like that is a huge amount of value. And there's literally billions of dollars going into supporting and securing the Bitcoin network every year. So there's kind of like a floor at which there's inherent value in the Bitcoin network from this worldwide computer that's running it. I like to think of it as like the machines are paying us to build a machine that can never be shut down. And the only thing it can do is
The
transfer
Bitcoin is
value today.
controlling us.
It totally controls. Look at I work an unbelievable amount of hours trying to support this machine and keep it running.
I mean, can
you
you
know,
imagine, Satoshi when he first started mining Bitcoin on his 2008, laptop probably, versus kind of where we've come to today? It's unbelievable. I mean, I still remember friends in college mining Doge in their dorm rooms, and stealing electricity from universities to this industry, to your point, with 5 million pieces of equipment. I mean, and the average price of this equipment is in the thousands of dollars, right? We're not talking about inexpensive equipment. Around the globe supporting this network is quite tremendous. I mean, when I think of Bitcoin, I like to think of the community and kind of the fundamental value that enough people believe. But I think mining plays into that community, right? And obviously
absolutely.
there's that investment in the actual infrastructure and the infrastructure that's supporting it. But it's the community of miners that believe in Bitcoin is a huge part of this puzzle that I think is sorely underrepresented. I mean, you go on CNBC and you hear people talking about Bitcoin and the price and being digital gold. Nobody talks about the miners, and I think that's kind of an underrepresented part of this industry
Yeah,
at this point.
people ask like, when are the institutional guys going to show up in the mining space? We deployed $100 million in the last 10 months. Like, how much bigger do you have to get before it's institutional money?
Right.
So it's
And
here.
I mean, and Barry Silbert, epitomizes institutional money from his background. So, and
Yeah, absolutely.
on the board of DCG and on the investment committee are guys from Bain and Glenn Hutchins, who used to run Silver Lake. I mean, that is, they've been institutional for 5-6 years already. So,
Yes. Yeah.
and
And
so
we
no,
didn't spend much
go
time
for it.
talking about proof of stake. That's like the other half of our business. And just real quick on that, it's an exciting world on the proof of stake side, and I'm
Yeah,
learning
give
it
us
as
your thoughts on ETH 2.0 as well.
so we're participating. We got our nodes up and we've staked some ETH, so we're part of the Genesis block, which is pretty exciting today for that to go live. I think what I think people underappreciate right now is a lot of the projects that got kicked off back in 2017 and early 18. Those teams have been heads down building for the last 3 years, and their proof of stake networks are going live now, and it's pretty exciting, kind of how these are going to play out. I think it'll coexist with proof of work. Like, Bitcoin will always be proof of work, and I think it provides a certain level of value. But the proof of stake, I think, is going to be a huge industry, and we're in the very early stages of it.
And so how do you envision yourself participating? Because I think inevitably with proof of stake, there's more risk than with proof of work because you have exposure to the underlying asset, right? Whereas with Bitcoin mining, I guess you do as well, but you don't have to, you don't have to go out and buy, 5 million BTC to stake it, right? You can just run mining equipment and not have that underlying exposure. So, kind of how do you think that through in a way? How do you determine what assets that you want to stake and what assets that you want to have exposure to?
Well, one of the best things about working at DCG is the fact that we have an amazing team, and those guys think through which protocols they want to support, and we're able to provide the infrastructure part of that investment, right? So DCG may support the underlying team, they may buy the asset, and then we can build out the infrastructure to support these proof of stake chains. So I'd say we're, you know, if folks are looking to kick off a proof of stake, a new proof of stake algorithm, you know, they should reach out to us, because we can be a strong supporter of their network and many different levels.
And do you guys offer or plan to offer staking as a service? Is that kind of part of the offering?
You know, I don't know if we'll, so the answer would be yes, but it's going to be focused on institutional type customers, right? So we've kind of got our own built-in customer base between.
Like if Genesis is custodying assets, they could be, you guys could run nodes on
we
their
could
behalf.
provide that service to them. Yeah, we'll never, you know, reach out to the retail market. It's just not our business model.
Right. No,
Makes
focus.
sense.
Makes sense.
Yeah.
And I guess Luno, I mean, DCG has such this bill. I mean, for anybody who's not aware of DCG and has just been listening to us and not familiar, I mean, DCG runs crypto. I mean, Barry is, you know, I joke that Mike is the king of crypto mining, but Barry is really the king of crypto behind the scenes. I mean, DCG runs the largest lending desk, the largest, you know, fund through Grayscale. The, you know, one of the two largest publications of the space has 150 investments and has now deployed $100 million into mining, and, you know, does so many other things. You know, earlier this year, they bought one of the larger retail exchanges called Luno, which has millions of users. And so, you know, what I'm just alluding to here is potentially, you know, Luno wants to offer staking as a service to their customers, and just kind of how DCG has all these opportunities to play between the different resources.
Yeah, you know, Luno is such an incredible company. I didn't know anything about Luno until DCG acquired them, and they're the Coinbase of the developing world. They have 5 million customers. They have over 400 employees. It's an amazing organization, and they're bringing cryptocurrencies to all the parts of the world that need it the most, and it's really exciting. It's really exciting, and it's super happy to have them part of the team. And yeah, we're going to be able to support them in a lot of ways.
And so, moving on to, you know, our last kind of, you know, few questions. The first, which we like to ask everybody, is what worries you most about crypto, and what about the industry has you most excited today?
What worries me the most? So I'm much closer to the end of my career than the start of my career, right? So I guess one thing that worries me is
FOMO.
It's not gonna. What's that?
I said you have FOMO. You want to be here for a while.
Yeah, like I'm worried it's gonna take too long to play out, and I'm not gonna get to see kind of the fruits of it. On the flip side, I also think there's a possibility it's going to happen much faster than any of us anticipate. And I don't know what what the worldwide implications of that will be. And, you know, I hope it's a peaceful transition. So I guess that's something that I spend a little time thinking about.
I've kind of moved into the boat of, I'm just going to buy Bitcoin and hold it. I have no idea where it's going to go, but I think it's going to go up. It's just a matter of how long it takes to get there.
Yeah, for sure. Yeah, for sure.
And so if you weren't in crypto, what kind of job or do you think you'd have today? Do you think you'd still be doing, you know, these private equity backed deals and being an operating partner? Or?
You know, I don't know if I could go back to the old world. Like this crypto space, it just moves so fast. It's so exciting. It's such an impact on the greater good of humanity. I would have a really hard time going back to the traditional world. So I'm here for the long term. That's my goal. That's my goal, Josh.
And so, how can people reach out to your team?
So they can find us on Twitter at Foundry Services is our Twitter handle. FoundryDigital.com is our website. You know, you go on the website and reach us that way is probably the quickest and easiest. Uh, and like I said, if you're looking to make investments in the mining space, just reach out to us first. We can kind of talk you through it before you make a bad decision or hit one of the pitfalls. Hey, one thing we didn't talk about is the tie. Our team is using your product, and they love it. They love it. So
Well,
congratulations, Joshua.
I appreciate that. I appreciate that. The point of this podcast is to not talk about the tie, but I appreciate the little pitch at the end. Maybe I'll have to take this and move it to the front of the video just for anybody who decides they want to leave after 20 minutes, at least gets the pitch.
Look at you. 3 years ago, we met, and you laid out your grand vision, and it's amazing what you've been able to accomplish.
And what we've done today is absolutely nothing like what the grand vision was 3 years ago. But that inevitably, is part of being a startup. Like I just remember, and I remember, so Mike, I actually met you, and I think you know this, on the first day I quit my job to go full time into crypto. I remember laying out this vision, and I still know nothing about crypto. I mean, this industry evolves so fast. I know nothing. Like absolutely nothing, but I knew completely zero back then. And I would be so embarrassed to walk into a room with myself and to hear how I was talking about crypto and thinking about the industry back in 2018. But I think a lot of people can probably say the same thing. But it's funny. I mean, Mike was there when we got, our first office, and it was 2 people in the city, and we had a whiteboard, and we were just drawing out all these terrible ideas that never came to fruition. So it's I'm happy that you've been part of this journey, and also that I've seen you grow from just having Savage and being part of this thing to now running the largest, or what will become the largest mining operation in North America.
It's been a fun journey. It's been a very fun journey.
Well,
more to come.
Yeah, I appreciate your time as always, and I'd love to have you on for another episode at some point to just go over the staking part, because to your point, we really just covered mining, and there's so much to do. But thanks again. Really appreciated this. I thought it was a great episode, and loved having you on.
Yeah, Joshua, thank you very much for the invite. Really appreciate it.